Hello and welcome to a special edition of Next Level Charting. Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. And today I would like to introduce you to the Trend Investor Pro Indicator Edge plugin. These are 10 indicators that you can use to take your charting to, of course, the next level. So these indicators are designed to be used kind of like a suite together. We've got 5 trend following indicators. We've got a momentum composite that aggregates 5 different momentum indicators. We've got 2 volatility indicators so you can know if risk is rising or falling in the marketplace. And finally, we've got 2 indicators that are kind of hybrids. They can be used in either a trend or a momentum way. So the first indicator is the moving average trend, the trend of a moving average. And as its name suggests, it is a trend indicator. And what it's measuring is the rate of change of a moving average. So here we have a 125 period moving average, and I like to use 125 days to capture a medium to longer term uptrend. And you can see the moving average is going down and the rate of change is negative. And then you can see the moving average turns up and the rate of change turns positive there. And I put threshold signal lines there. So a move above 0.3 signals a good enough upturn to be bullish, and a move below minus 0.3 signals a downturn to be bearish. And that will avoid some of these little downturns and whipsaws. And with all of these indicators, if you go to the upper left and you open the settings window and click on the settings wheel there, you can change any of these parameters to suit your trading or investing style. The next indicator is the StochClose, and this is a trend indicator. And the stochastic oscillator, it measures the position of the close relative to the high-low range. And I call it StochClose because I'm only using closing prices. So it's the level of the close relative to the high-low range, closing prices only, over the last 125 days. And I smooth it with a 5-period moving average. And so when it moves above 60, that's bullish, and you can see it's green shaded. And then when it moves below 40, that's red shaded, and that's bearish. And there are going to be some whipsaws here. We got bearish here in 2019, but got bullish and caught this move, and then bearish, and then bullish again. And it's my preferred trend indicator when it comes to ETFs. The next trend indicator is the CCI Close, the Commodity Channel Index. And you may be thinking, well, stochastic oscillator, commodity channel index, and I got RSI coming up. Aren't those momentum oscillators? Well, they are, but it also depends on your settings. If you're setting your indicators in the 10 to 20 day time frame, that's a short-term time frame, and that favors mean reversion, and that favors a momentum oscillator. But if you change those settings to cover 125 days or 6 months, then it becomes a trend indicator. And Donald Lambert, who developed CCI, he talked about CCI as a trend indicator. And the way this works is just like normal CCI, and I'm just using closing prices because I don't want these high and low spikes to add extra volatility, especially in ETFs. But you get a surge above 100, that's bullish, and you can see it stays. We got a little whipsaw there, but we caught a pretty good uptrend in Activision. And then you get a plunge below minus 100 to turn bearish, very timely, and stay bearish until you get that move above 100 there, and caught a nice uptrend. Got a whipsaw with the March crash, but then caught a nice uptrend to new highs. And so that's the way this one works. It's looking for a sharp move in one direction or the other in the CCI to signal the start of a trend. So now we get to the Trend Composite, and I wanted to introduce those first 3 indicators because they are part of the Trend Composite. The other 2 indicators that are part of the Trend Composite are Bollinger Bands 125.1 and Keltner Channels 125.2. And you can go to the chart school to find out more about those indicators. But you see Bollinger Bands in pink, so you can see a breakout there in Amazon above the upper Bollinger Band and upper line of that Keltner channel. Then the other indicators are the CCI Close, and I'm going to turn that little pointer off and show you the other indicators. We got the moving average trend, and you can see it's been bullish for quite a few months since February there. And then we've got the StochClose, and it got a whipsaw. And then we've got the Trend Composite, which is aggregating the signals in all 5 of those indicators. Because what I've found is often what happens is you don't know which indicator is going to be the trigger. And if you've got 5 and one triggers, okay, that's no big deal. But if 3 of the 5 trigger, then you get a +1 as far as the Momentum Composite is concerned. 3 bullish signals and 2 bearish signals. And these indicators are either on a bullish signal or a bearish signal. There's no ambiguity here. So you can see Amazon was bearish there from August 2019 up until January 2020, and it got bullish. It got whipsawed during the crash in March, but then was one of the first to turn bullish here in early April when you had 4 of the 5 turning bullish there in early April, and then all 5 turning bullish a little bit later, and caught a good trend in Amazon. Next, we have the RSI Trend-Range indicator. And basically RSI, when it's above 50, prices are rising. When it's below 50, prices are falling. And I use a 65-period RSI, and I smooth it with a 5-period moving average. And basically, it's bullish when it goes above 51. There you can see the green shading, and bearish when below 49. Now you're going to say, oh man, look at those whipsaws. Well, if you look at any trend following strategy over 1,000 trades, you're going to get whipsaws. Trend following works, you get about 40% win rate, and that's actually pretty good. And the method behind the madness is these whipsaws, these losing trades, you can see 2 of them in a row, are going to be paid off when you get a big trend like you would have caught here from September 2019 up until March 2020, and then again in March 2020, a huge trend there. And so the idea is a couple of good trends are going to pay for those whipsaws. Next up, we have normalized ROC, rate of change. And this is a trend momentum indicator. It can be used both ways. And you say, well, how can that be? Well, I'll show you. But what the normalized ROC does is it measures the absolute rate of change. So the price change over a 20 or 5-day period you can choose, and it divides it by ATR 20 or ATR 5 you can choose. And when you use 20 days, I like it as a trend indicator by identifying what I call a ROC shock. And a ROC shock is when you get a sudden outsized move in one direction or the other that can signal the start of a trend. And if you look at SPY here, we got a ROC shock there in September 2019 when the normalized ROC moved above 3. So that's basically a 3 ATR move. And it stayed bullish until we got this ROC shock in the latter part of February. And that was bearish until we got the ROC shock in mid-April. And that was a significant upside move, and it stayed bullish. And if you look at it right now, we've had a ROC shock in late September, and that would argue for at least a correction of this big advance, and maybe we come back to that 300, 310 area. Now, the other manner to use the normalized rate of change would be on a shorter time frame, say a 5-day absolute rate of change divided by a 5-day ATR. And when you get a short, sudden move down, as we did here in the early part of September, this is Fastenal, you can see it became oversold. And when you get this oversold, you need to perk up for a potential bounce, especially if you're in an uptrend. And the bigger trend is clearly up here, and it's oversold and firming here. And that leads me to the Momentum Composite, which is an aggregate of 5 momentum indicators. One of them is the normalized rate of change. You open that sidebar there and click on the settings. You can see I've got 10-period RSI, I've got %B, I've got the StochClose on a shorter time frame, 20 days. I've got CCI Close on a shorter time frame, 20 days, and Normalized ROC. And these indicators are either overbought, oversold, or neutral. When they're overbought, it's a +1. When they're oversold, it's -1. When they're neutral, it's just a 0. And I'm usually looking for oversold conditions when the bigger trend is up. This is Moderna. And there you can see the rising 200-day. And there you can see the oversold, the Momentum Composite hit -5. All 5 indicators were oversold, and you're above the 200-day moving average. That is a unique oversold condition. And you can also see kind of a falling channel and a bit of a breakout working there. The next indicator is the percent above a simple moving average. This can be the close above and below a moving average, or a moving average above and below a moving average in percentage terms. It's kind of like the simple moving average version of the PPO, the percentage price oscillator, which typically uses an EMA. And I've got 2 versions here. This is a percentage above the 200-day moving average, and we've got lines at +3 and -3 to filter the crosses. So we just don't take a cross above the 200-day. We want it to get above 3% to signal a decent cross. And we had a decent cross here in 2019-20. We got a bearish cross there in March 2020, but a nice bullish cross there in early April, and it remains on a bullish cross. Now on the other side, as far as momentum, this is a percentage above and below the 50-day moving average. And when you get above 10%, you're getting frothy, and you probably want to let things settle down. And here you can see things are settling down, and kind of a flag forms on the chart. And then you can see now things have settled down. We move below the 50-day, and we're 5% below the 50-day there in early September. And that's kind of an oversold condition to watch out for a bounce. And we got a channel breakout there. And last but not least, we have the volatility indicators. First, we have normalized ATR, which is the ATR divided by the close. This is a 5-day ATR divided by the close. There's a 10-period smoothing on the red and green, and then a 10-period signal line there. So you can see when volatility is low, that's bullish. And when volatility is high and rising, that is bearish. And then you can see we got falling but high volatility, and that's when we had a rally. And then we had a really nice rally in July, from early July until mid-September with low volatility. And then the other one is high-low range percent. It's 5 periods, and it's the high minus the low divided by the close. That's the range. And there you can see we've got a line at 2 and pretty much low volatility up until that surge there in late February and March. And then it came back down, and it's been on and off, but mostly low, especially in this period. And when volatility is low, that is a bullish condition. But when volatility shoots up, that is a bearish condition. So if you want to know more about any of the plugins or ACP, go to the help link at the top right of every web page. That'll take you to the support center. Type in plug-in for plugins. Click search, and there you'll see a link for the ACP plugin information. So thanks very much for tuning in to this video, and check out StockCharts ACP if you want to learn more about the plugin. Thanks again, and have a great day.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.